What's up everybody, and welcome to another episode of Drive to Thrive. In today's video, let's discuss Zoom. Now, as I've been searching through my watch list, I came across this stock and the chart does look pretty interesting. So why don't we take a look at it together, and maybe you can tell me what do you see in this chart, and I'll tell you what I can see in this chart. But otherwise, I hope you enjoyed this video. If you do, don't forget to give it a big thumbs up, as it's always greatly appreciated. And let's see what the charts are telling us. All right, so here we are, weekly time frame of the Zoom chart. Now, as you can see, we've been down to these prices before when we IP'd out. Now, then we came back to retest it here in November, December, early January of 2020, and then bam, a massive run up all the way up to like $580 and some change, towards October of 2020. Now, we all know what happened over here to cause this spike. It was the whole shutdowns, the whole work from home, and so on and so forth. Lots of money pouring into stocks like these stay-at-home stocks. So lots of euphoria, but then guess what? After we topped out, this stock has seen no love. It's just been going down and down and down. And then pretty much for the last year, we've just kind of been sideways, range bound in this zone right here. So let's try and decipher where we go from here. Looking at the MACD here, this is something that worries me a little bit. Now, anytime we see this overextension, I expect the MACD to work its way towards the zero line. Now, once we get to the zero line is the decider. Do we end up breaking through here and the momentum finally pops over, onto the bullish side, and we keep riding the wave higher? Or do we cross over to the downside? Now, if I zoom into this chart, guys, you can see that we are crossing over. We are losing that momentum right here at the zero line. And again, because it is on that weekly time frame, it is the longer time frame, I think there's more pain ahead, coming off of these lows. Now, I'm not sure if it's going to happen this week, if it's going to happen next week, but it's not looking all that great for the stock, in the long run. Now, looking at the stochastic RSI, definitely some room still to go lower here, to go into that oversold territory. Now, going over to our daily time frame, this is maybe that shorter, swing trading kind of time frame here. We can see that anytime we hit around $64, in the past, let's call it year and a bit here, we see a bounce from these levels. We had one over here, we had one right over here. We had a bounce coming off of here, another one there, another one there. You guys can see the pattern, right? And guess what? We're again sitting around that 64, 62.75 as of close right now. So do we get another bounce off of here? Possibly. Now, a nice little short-term trade that I could see, that possibly might work on this stock is we set our stop loss just below this previous low, which was around 60 bucks. So let's do it maybe at like $59 would be our stop loss here, $58. And we're looking for the bounce, to play it up to the $75, $76. Now, if this baby breaks down on us and this is actually, going to go lower from here, well, guess what? If you have your stop loss sitting around there, you're looking maybe at around that 5 to 6% loss. Now, if we get a bounce up from here, you're looking at around 19 to 20%. So again, that risk to reward ratio definitely outweighs. And if you play it smart, I think there is some money to be made here in the short term. Long term, like you mentioned, that crossover on that MACD is kind of freaking me out. Now, let's go over to our monthly time frame, which is even longer. So the MACD here looks pretty good. We have that crossover making its way up to that zero line. The momentum is building, so looking pretty good on the MACD. However, the stochastic RSI is rotating off of this overextended, overbought territory, and lots of room for it to fall back down lower. So again, just be cautious, because I'm not sure if this is the greatest time to be going in for that long-term investment. And now another red flag that I see is when I went over to Market Beat and I went to look at what the insiders are doing. So this is over the last 12 months. You can see they've only been selling. So why does somebody sell? Why do these insiders sell? Well, there could be numerous reasons for why they sell. They might need the money, they might need the liquidity, they might see a better opportunity out there, various reasons. But there's only one reason why somebody buys a stock from the insiders, They see the future potential. They believe in the company. They like the story. They see the growth. And I see nothing like that happening with Zoom, which is kind of freaking me out. And because these insiders don't believe in this company, I don't believe in this company as a long-term investment. So for now, I will be hanging on the sidelines, possibly just looking to do a short-term trade. Now let's go over to some financials, and maybe those will give us a little bit of a tip why these insiders are selling. So let's take a look here. So this is results for the second quarter and 6 months ending July 31st, 2023. So let's see, reported sales was 1.139 billion compared to 1.1 billion a year ago. So that's an increase. Now our net income right here is about 182 million compared to 46 million a year ago. So that's a huge growth here on our net income. Our basic earnings per share right here are sitting at around 61 cents compared to 15 cents. So that is another good beat there. Now overall, everything else looks pretty good. Let's see, the sales was sitting at around 2.2 billion compared to 2.173, so just about even. Then a net income here of around 197 million compared to 159. So we're growing, which is something we want to see with these kind of companies. Now our margins here, so gross margins are looking pretty good, sitting at 76%. Operating margins about 5.6%. Net profit margins about 3%. Return on investment 3.26, pretty good, all positive numbers. I like to see that. Debt, really low debt, so that is great to see, 1.22%. They got way more assets than they have liabilities. Again, great to see, especially if we go into recession. We want to see lots of cash on hand. And let's see, for our cash flow here, we're currently sitting at around 19%. So at a quick glance, looking at these financials, actually they look pretty good. There is no red flags that I can see just at a quick glance here. So overall that looks good, but the short term, you know, the sentiment, especially if the market decides to tank a little bit more into Q4, Q1 of 2024, possibly see a recession in 2024. We could see Zoom, you know, be anywhere between $40 to $30. I would not be surprised, you know, for the lows. So that is why I'm, again, just kind of being cautious right here and playing this more as a short-term trade instead of that a long-term investment. But you let me know in the comments below, are you invested into Zoom? Do you like this company as a long-term investment? What other stocks are you looking at? I really appreciate all the comments, but otherwise have an awesome week ahead of you, and we'll see you in another video. Cheers.